What's up, guys? Welcome back to another trade breakdown. Today was definitely one of those days where I was just super tired. Definitely had a little too much on my chart to keep up with. And I think that's a huge problem because I have some bias in the morning, and then I would draw so much stuff on my chart that I would just be like, I don't know why it's there. For example, this 1 hour inverse fair value gap, which I will talk about in a few minutes, this is still on my chart. This should be completely deleted. As you can see, we traded through this multiple times. I'll talk to you about the analysis and what happened here. But this should be gone, and it's still on my chart. I still have not deleted it, but I'm going to keep it there just for the analysis. But there's a bunch of stuff on my chart that just starts to add up, and it just makes it look horrible. I have too much, and it just looks bad. So that's the first mistake. The second mistake is not really taking a step back, okay? I have been so focused, so locked in, if you will, into the charts from basically the start of this week. And I just can't get my mind to stop thinking about them, and I just can't. I have to look at them 24/7. And the problem with that is sometimes I'm so deeply focused into a model or into a bias that I'm completely blindsided into what I know and the experience that I have. Now, personally, today was kind of an emotional day for me. I guess today or yesterday we lost our funded account due to max daily drawdown being hit or some shit. It's definitely sad because I was like $100 away from actually getting hit, and I lost it. The max drawdown limit or whatever came up a little bit, and I got fucked. So, but that's that. What I'm gonna do now is use my, I guess, the demo account or the practice account on the funded that I still have access to, and I'm just gonna do trading there, and I'll see my win rate. I'll take the live trades. I'll try to do everything with the practice account. And if I can pass the practice funded account without hitting my daily drawdown or whatever, then that's gonna be cool. Then I want that to happen, and then I could possibly buy another funded, because I think the biggest mistake was the contracts. The contracts on futures, I've never traded before, and they move crazy. Like, they are fast, and that is what caught me off guard. Okay, let's talk about it. Let's talk about what the hell happened today. There's a lot. So what I'm going to do is I'm going to go to this cleaner chart, which is just the same version, but just on a cleaner chart. We're going to go to the daily first. We're just going to look at the daily and see what we've noticed. On NQ, that's what I was trading. You can see we passed the negative 3.5, so now we're above the negative 3.5, and our next target is the negative 4. Personally, I thought the negative 4 would get hit today, and I know some other traders thought that as well, and I never thought we would have a bearish bias for today. Now, unfortunately, that was wrong. That was wrong to think of that, I guess. And the reason why is we actually had, and I hope this shows up on the 1 hour, we actually had a 1 hour sell side model that was being placed. If you guys remember, I was bullish. Let me try to pull up the Discord. Where is it? No, it's up here. MAQ. I said, so this was today. This was yesterday. I said 1 hour discount 30-minute fair value gap. Not looking for anything right now, just watching to see where price goes. And as you can see on MAQ, it's basically just NQ on mini contracts. This was the range on the 1 hour. You can see the equilibrium was under those lows, and I had a 30-minute discount fair value gap, which is like right under Asian lows from previous session. Tap into that, and we rejected that level. And so to me, that low was protected, and all we were going to do is go higher. Okay. In the back of my mind, I knew that it was going to be a little unbelievable for price to buy everything back up off just a tiny level that it just tapped into. Usually that doesn't happen. Usually it needs to fully sweep it. We need to see a full buy model, at least in a live market and not like aftermarket. That's a little weak, not too much buying pressure. What did ultimately happen though, was we got protected lows here, tab, and it kind of came up, right? 5 a.m. And when I came on the charts today, I was looking for obviously this high to get taken out. But you do notice there's a lot of distribution to the sell side down on this displacement, even on the 1 hour. What I didn't notice was a 1 hour sell side model. What I didn't notice is this negative 3.5, right, was almost hit to the tick, if I'm not wrong. I think if I zoom out enough, no, 3.5 is down here. Where did we... I remember this high was made because of something else on Wednesday. Pretty sure we hit a we hit something on NQ. Pretty sure it was this, right? Where was the 3.5? It was the 3.5, yes. So on NQ it was a 3.5 standard deviation. NQH 2024 was a little different, but yes, it was the same idea. Anyways, we hit that. Now, it's not really considered a high time frame PD array, but it does have a nice reaction. As you can see, we do create a market structure shift down here on the 1 hour. And that's important because this displacement here, and if we mark the range of just the displacement, we can see the equilibrium is right around here. There are two things I'm paying attention to, and that is this fair value gap and that fair value gap. Okay. Usually when, and this is again from experience and just the OT itself, usually when there's a 1 hour or big time frame or big range like this, the OT is going to be up here, right? So even if I switch this and I go to OT, you can see it's up here. Boom, right there. Pay attention to where this OT lines up. Right away, I know exactly what is happening here. I don't even need the OT anymore. It's a 1 hour SIBI with consequent encroachment. That's what it was. Right? That's all it was. That's what we needed. And if you look at the OT again, you'll notice the OT lines up with the consequent encroachment on the 1 hour. This is the 1 hour time frame. So that was our target. Now, unfortunately, I again thought that this was a buy model because we were bullish and the order flow to me was bullish. What was bullish also was not this, the news. We had bullish news. We had the unemployment claims and the GDP. Okay. This was actual greater than the forecast, good for currency. So that was bearish. But this was extremely bullish. So kind of vice versa. And let's go to the 5 minute just to see the news. As you can see, the news hit down here. We had, let's go kill zones here. We had, oh God. We had Asian lows down here and London lows down here. Okay. And so I was looking forward to, why is the thing not on? Oh. What the fuck? I was looking for London lows to get taken out by this candle. As you can see, it didn't really do that. And so you might remember, wait a minute, French, didn't you have an inverse fair value gap on NQ or something that you were going to talk about? Yeah, I did. I did have that. And the reason for that was I'm pretty sure this was a 30-minute inverse. Okay, so I got to redo all of this. Hold on, give me 1 second. Not, okay, it was a 1 hour. That's what it was. So 1 hour inverse. My thought was when this candle came up, we were going to inverse this fair value gap and just continue higher and make a buy model inside this fair value gap. As you can see, I should have closed it or deleted it after this candle because it just completely got violated, right? But that was the bias. I thought it was going to go higher. As you can see, it didn't quite go higher. It hit that OTE or that SIBI, and I'll show you on NQ it actually hit like to the tick right here, and then it went higher. So I was looking for London lows and Asian lows to get swept. Unfortunately, we didn't get that at all. I'll just show you again right here. We didn't get the London lows. We didn't get the Asian. The only time we got them was when price diverted back down. But basically, this was a whole. I guess you could call me liquidity. I mean, this was I went long during this consolidation to escape higher, and as you can see, this was the move that decided it all at 11:30. This was in the middle of tutoring. I saw this live. I was live. I watched this candle just spike up. I had a position in here. It spiked up and just completely dumped. And I think a note. Let's just go back on NQ real quick. A note I had and I wanted to talk about. We said 1 OT bearish OS. Fearing. So yes, Fearing is I'm in his Discord, but he's a guy I found a couple days ago, and I'm in his Discord, and he gives like these alerts. He just gives these like pre-market analysis and alerts. As you can see, at 9:32, I was not watching this, but at 9:32 he said 1 hour OT rejection, SMT internal highs. You can see this is what I had marked out right now. I didn't have this marked out previously, but you can see the OT, the 1 hour SIBI, the consequent encroachment gets hit perfectly. The OT gets hit perfectly too. And that's what I missed. And he caught on that. Let's see what he said. 3 OT delivered. Apologies for lack of. Okay, yeah. So OT delivered. You can see there was SMT as well, the YM. And he had another range here marked out. So that's what he had. And it was inspiring because he's a good trader. And I look up to him. 1 hour SIBI, consequent encroachment, you can see when market opened, it came all the way up. Well, market opened up here. And market 925 hit, market open, consequent encroachment, OT, and then dumped. The cool thing is that there was actually a sell model that was forming on the 1 minute that you could have caught, and that's what he did. And I was just not paying attention whatsoever because, again, I thought we were in a buy model, so I was looking for buy model and not a sell model, right? So it just shows you when you have the wrong order flow, the trades don't come because you're not looking for those trades, right? So what happens? So let's talk about it. And this is actually a pretty nice what's called sell model. All right. So what actually happens? You can see here we hit that high time frame PD array, which is a 1 hour SIBI, 1 hour OT, 2 PD arrays. Good. We reverse right back down. On the 1 minute, there's this fair value gap that gets created. So this is intermediate term low that gets broken through on the 1 minute. Market structure shift, bearish market structure shift. This displacement is big, but you can see it gets bought right back up. And this is where it's important. When you draw your standard deviation from the swing high to that swing low, you can see that the targeted standard deviation, and he calls it like a devil's leg or something, and he targeted the negative 2.5, which is what you should do, and it hit to the tick. It went lower a little bit, swept, and just went right back up. So if you targeted like the negative 3, you would be fucked. And the entry was quite simple, actually. As you can see on the 1 minute, there is a pretty big fair value gap here. Now, you could enter all the consequent encroachment. That's fine. But in this case, the fair value gap is too big. I'm not going to go to a 15 minute. You can go to a 15 seconds. That's just a little ridiculous for me because it happened so fast, right? And maybe there is a fair value gap up here. Yeah, right here. Oops. Right here. right? Maybe you want to enter off this. That's fine. You know what? That's fine. You can do that. That's fine. What I did though, and what you should do, is draw the OT again. Because yes, we just hit a 1 hour sell model, but there's another sell model happening right now. And just to be sure, swing high to swing low, OTE, drag it out. What does it come to? You enter off the OT wick. You can see this gets respected beautifully right away. Enter on the consequent encroachment. Now, the stop loss could be above these highs, but this high is now what's called a protected high. Because of this market structure shift and strong sell-off, the last thing you want to do and you want to see is this high get broken, because that just shows you bullish order flow. Now, that's what I was hoping, obviously. And as you can see, we just went lower. I didn't really catch this trade. This was fearing's trade. I was just showing you. So the potential stop loss would either be here, but knowing that it's protected highs, your stop loss should be lower, because if it's going to come up anyways, it's going to take out that high anyways. So might as well have your risk reward to the end of the OT when you see these candles get respected. The take profit, quite perfectly, devil's leg. He called it, literally. Boom. Perfect trade. No drawdown, barely any drawdown, perfect executions. What's the problem with this though? The problem I'm having though is when I'm in school, I just simply can't catch these trades. 9:30. When was I when market opened? What's my first class? I was in art. Now, yes, I wasn't doing anything in art. But again, I'll remind you, having the wrong bias for the day gives you an illusion on the market. It gives you a whole perspective, and it makes you look for models that aren't there. And I'll talk about the model that I did. I'll delete this real quick. And what happened? So again, I was looking for a buy model, and I had another guy on TikTok take the exact same trade. But this buy model was again on the 1 minute. And I took this during an assembly. So I was on my phone, kind of distracted. And you can see this didn't really, it worked, but it didn't work out. And the reason for that is, again, I didn't see the 1 hour OT, but you can see this is the top of the OT. That's the OT entry on the 1 hour. And that's the SIBI right here. But we've already traded through that, right? Delete this, delete that. Delete this. Okay. We come down. Now, I did predict that we would come down to the 930. We'll hit this. Equal highs pre-market. As you can see, this is the line right here. Now, it did hit it. It didn't hit it to the tick. It went lower, actually. But on the 5 minute, it swept it. And that's what I was looking for, a buy model. So after this, I knew that if price went up, we'd go for a buy model, which I was right. It did go up, but it didn't go up, unfortunately. So from here, I was looking for a 5 minute to a 1 minute market structure shift. There is a line here that's pissing me off. I don't know what it is. Oh, it's equilibrium. No, that's right. Of the whole range. Yeah. The 1 minute here. As you can see, price comes up. What's it called? Swing low, swing high here. Takes out a fair value gap. So to me, this is an intermediate term high, which is good. I say if we sweep this on this candle, we get a bullish market structure shift. Look at the standard deviation. Does it make sense? Is it good? As you can see, the top, the devil's leg, is a negative 2.5, and that would be the target. You look back, is there anything that you can target down here that could be potentially used? Maybe a little liquidity up here. But see, if you targeted that, you'd probably be break even now, right? Because your first take profit would be here, whatever. You'd be break even, which is fine. It's not to worry. But once you saw this price action, I would just get out right away. Because again, in a sell model or a buy model, what you want to see right away is the OT or the fair value gap get respected with these wicks, and it immediately gets selling or buying action. So once you're seeing this, and I'll show you the entry, we get the range, huge proportion up, Huge. I'm like, holy fuck, this is gonna come back down like a motherfucker, and we're just gonna pop off. Okay, so what happened? I marked the range. Or let's do pretty colors. Boom, boom, boom. Where's the swing high? Here. Or swing low? Here. Equilibrium is here. I like this low. Why? Because this means that when price comes back here, it sweeps it. We enter off a fair value gap, and it's going to go back up. I like this. That's what I want to see. Although what I don't see is a 1 minute fair value gap in this whole displacement. There's none. None that I can see here. Absolutely none. And this is where it gets tricky. So I'm like, what the fuck? There's absolutely nothing here. Okay, fine. So maybe draw your OT, see what the OT says and where it is. And the OT is down here. All right, so let's track the OT because there's no fair value gap. As you can see, price does sweep. Let me delete this. It does sweep that internal low. It does have a reaction, but it doesn't bounce off the OT. The only thing there was yes, a maybe tiny 1 minute fair value gap here. That's all there was. That's all I marked out. That's all I had on my chart when I entered this. And I'm pretty sure, actually, if I scroll back in time into my Discord, give me 1 second. If I go to the free chat here, I go all the way back. Boom, found it. I asked why I was getting rejected because I tried to enter long with my with my futures or with my top step. You can see I had the OT marked out and I had that 1 minute fair value gap marked out right there. You saw that, right? Had that marked out. As you can see, price taps into it and we wake up. Right, that would be your entry. That'd be it. That'd be like, okay, we're good. And so I got rejected on my my funded because it was, I got fucking liquidated. So I took a real trade with options and I was just not ready. I was a little stupid. I took the option contract on SPX, even though I was trading NQ. So you can see how that's not correct right away because option contract on SPX is not going to move the same with NQ. Lots of SMTs, lots of divergence. There's a lot of stuff that can go wrong. That's exactly what happened. So even though NQ went up, SPX was a little undecisive. So my contract went to drawdown right away and I had to sell. So I couldn't take my first take profit. I was just like, fuck it. Contract looks bad. Price action looks bad. I'm selling. But you would have gotten your entry here, right? Fair value gap close to the OT. You would take that. Consequent encroachment hits that. Stop loss, protected lows are down here. Theoretically, if this worked. So stop loss would be here. Tight. Take profit. Now, obviously, your first take profit would be probably these highs up here. And then your final take profit would be something up here. Actually, where's like the 1-to-1, if you will? Like 1-to-1. Like your first take profit would be like somewhere in this area. So let's just mark it like something like that. And then your second would be like up here. So you'd be break even. It'd be a break even trade. Not too bad. Not too bad. Right? And this is what I saw during tutoring and went up. As you can see, it swept, and look at these wicks. It swept the 1 hour OTE. It didn't fully close above, right? If we look at the 1 hour itself where you're supposed to take the trade, you can see right away how it respected it. That candle came up, and that was the 1 minute we saw those wicks, and traded all the way back down, which was this move down, back down. And that's where we saw that displacement leg down. Now, obviously, I went back to look for sell models inside this leg down. And as you can probably notice, there's absolutely none. And the reason for that is because it already hit its main level. And it's not going to do another little tiny sell model for you to enter. But what you can enter off is these fair value gaps here that it retraces back into the range, for example, like this one. You have the range that gets created here. Just as an example, like down here. What the fuck is it not going? What the fuck is wrong with this? There we go. equilibrium gets under, you can probably find a fair value gap, enter on these two, and re-enter in the range, right? So that was the that was the trade that I took here. Let's hope the executions work this time. Oh my god, dude, they don't fucking work. Oh wait, no, because I'm not. Hold on. Okay, there we go. So this was the practice demo account, whatever, and this is exactly what happened. You can see I bought a little later because what happened was, okay, I'm in calls here and options, and then the funded account didn't work, so I was like, fuck this, I'm not doing funded then. Switched to options, got in a call. As you can see, it ran up. I was like, oh yeah, this is gonna work. As you can see, it came right back down. I was like, okay, maybe he wants to retest the position. Who knows? The OTE respects it, whatever. Consolidates, runs up a little bit, breaks these highs. Doesn't really break him though. It doesn't really break him. It just consolidates. And as you can see, this is where I got emotional and I sold my position, bought it here and sold it right here. So maybe like I mean, to be honest, what is this, like a $30 move? Not really, like not that much. So almost break even. And this was one contract. And as you can see, this candle was the emotional one, but it hit a fair value gap right here. As you can see, boom, the bottom, and it just completely went up. And that's where I sold. That's what I saw during tutoring. I looked at my phone for 1 second. Candle came down. I closed the position. I was like, fuck that. I'm not doing this. I'm done trading for the day. I'm good. I've lost too many times. Ran up. I was like, fuck. I could actually make some money if I didn't sell the option contract. Boom. And then completely came down and would have fucked everybody up. Now, the other problem that I had with this trade is that I saw this on the 1 minute, but the standard deviation wasn't actually there. I had a 5-minute market structure shift for a buy model. And so I was a little stupid. As you can see, you can already tell that model right here. But what was the stupid part? There's two stupid parts. The first one is this is not even valid. So yes, it's a high, but it's not an intermediate term high. There's no fair value gap that it takes out. So yes, maybe it is a 5-minute market structure shift, and maybe the standard deviation is good. But look at where the standard deviation is. All the way up here. It didn't even hit any of our targets. So like a dumbass, I didn't take any profits. I just waited for this to come up. I was like, yeah, see, this is going to go above our previous liquidity point where it turned around. It's buy side liquidity. That's where we're going to be targeting. As you can see, what was stronger? The 1 hour OTE. So that's what took us out ultimately. Right? And if we look at the big picture, you can see how just well that OTE got completely respected here. Absolutely respected. The SIBI got respected. It got traded into. Consequent encroachment fell short, or the price fell short of the consequent encroachment. And you can see that it was just beautiful price action to take out not only London lows, Asian lows, but the quote unquote protected low. So there was 3 sides of sell side liquidity you could have gone in and just held. So let's say just hypothetically saying you did target this, for example, and this is where I'm kind of confused, right? Because on the 1 hour here, you have this huge OTE, but it doesn't come down to any of the standard deviation projected lows. It just barely comes into the previous day low, sweeps it, and then trades above. So it gives a sense that it was bearish and it wanted to sell off, but it also gives a sense now that we're still kind of bullish, right? I don't want to fight the trend, and I did say it was going to start reversal, because looking at the daily, right, if it closed above, and you can kind of see it wicked once, doji, and maybe the second day it's going to go down there. Could happen. Again, this is the hourly, so we can expect a move lower. And that's what I was saying. We can expect a move lower, but into what? All right. And so when you go into the hourly, or I went to the daily, I said the standard deviation has to go into what? And right here you can see the halfway, or the devil's leg, lines up with a daily fair value gap right here. When you go to the hourly, you can see that our target, our favorite target, is almost lined up with the consequent encroachment of that daily fair value gap. So I said to my Discord, hey, If we go lower, we could go a whole lot lower. If we close under this daily low, we could go a whole lot lower. And because we created that little low here, that is called sell side. And that's what I would like to target next if we're going to be bearish, right? That's what it wants. If that's really what it wants, it's going to come up with the range, right, of this hourly range. Let's just mark it here. Equilibrium, you can see it just did that. And then pre-market, aftermarket, aftermarket, pre-market, it's going to come down, right? Not up. But you know what I like to do? Just delete everything and just be done for the day. And we're going to reset. We're going to look at other people's analysis, what they did, what I did wrong. I did my video. I did my part. I'll explain way more in the daily recap in the Discord. I just wanted to make this video so it's out early for the guys that go to bed early. I know there's people in London and in Africa and stuff like that. So I'm trying to get this video out before you guys go to bed. All right. I'll see you guys tomorrow. Hopefully it's not fucking horrible. And I'll catch you on the flip side. Peace.